Does this trade have to play out? Not at all. Not at all, right? Often people think that, just because it's pushed into profit, like it needs to play out, right? But at the end of the day, the market owes us nothing. The market owes us nothing at all. Like, granted, this is a pretty good sign that we've started pushing into profit. We've moved just over a 1-to-1. And so from a lot of the trades that we've seen, when we get that initial push into profit, a pretty aggressive sell-off after entering, it's normally a pretty good sign. It's normally a pretty good sign, right? That's true. When you watch the trades, Devan, when you watch it, right, this is a huge problem. When you're staring at the markets, right, you're more inclined to maybe micromanage or more inclined to interfere, close it early, and, micromanage that trade. So what I really recommend you to do is literally close down the charts or close down your MT5, right? I don't want you to stare at the markets all of the time. Like, when you enter a trade, close everything down, don't look at it. And so as a result, you're not going to micromanage anymore. Right? A lot of that comes from temptation. If you're staring at it, it's just like, imagine your cupboards at home are filled with loads of sugary sweets and chocolate and everything. But not only is it in the house, it's in front of you. Right? It's on the table. Whereas if that sugar and that chocolate was tucked away at the back of a cupboard, well, you're way less likely to look at it, consume it, eat it. And that's the exact same thing with trading. If you can't see it, you're way less inclined to do anything, which is good for us because we know that we want to adopt that sort of set and forget style, which prevents you from micromanaging, interfering, and doing something that essentially you shouldn't, right? Yeah. How many trades last week? I had a pretty rough week last week. So I took 2 trades and I had 2 losers last week. I had 2 losses last week. The week before that, I had 2 trades and I had 2 winners. The week before that, I had a 10-hour week and I had 3 winners on one single day. Perspective is very, very important. And that's a very good point, just while we're on the topic of perspective, right? The problem a lot of traders face is they take a few losses, they get disheartened, they lose belief in the system, and then they strategy hop to the next system. But what I want you to do is I want you to look at the data. I want you to look at the past performance. I want you to backtest the system for yourself, or at least see the data for yourself. And as a result, you will no longer strategy hop. You will no longer jump to the next system. Because when you truly believe in a system based on the data and you have the conviction, that will prevent you from doing that. So that is what I would recommend to do. If you ever feel any form of doubt, any form of, lack of clarity, or you don't believe, or you don't have the conviction, and maybe that's because you've had 2, 3, 4 losses in a row. I encourage you to look at the data, and as a result, you will not strategy hop. I did get filled here. So I took this across multiple accounts, multiple funded accounts, and my average price is pretty much here. So this is exactly where I got filled. December no trade? That's a good point. So a huge misconception that a lot of traders have is they think that December is like an awful month. They think that, you cannot be profitable in December. And what I encourage you to do is, again, go and back test this in December, right? And see the results for yourself. And what you will realize is it doesn't matter. It doesn't matter. And so as a result, you trade December as normal. You trade December just like any other day, any other month, right? Yes, it can slow down around Christmas, like a few days before, a few days after, etc. It can certainly slow down. But I still just trade December as normal. Just like if it was like a bank holiday, if a trade presents and it sets up, and you may be thinking in the back of your head, which is a huge common misconception, which is, oh, bank holiday, there may be like a lack of momentum. There may be like a lack of volume, but it's like, if it sets up, it sets up. And so take the trade without hesitation. So there's definitely a misconception around trading in December, just like there's a misconception around trading in summer. The misconception is people say, don't trade in summer. And my answer to that is, have a look at the data. Right? We had a decent summer. And so as a result, you trade it. And you trade without hesitation. And you trade with conviction in summer and in December. As if it was any other day, any other month. But there's certainly a lot of nonsense online. I'm not a huge consumer of TikTok, but I'm assuming a lot of that is sort of coming from there, right? James, in terms of session manipulations, right? I would say the common theme is that sometimes people believe that you need to sweep sessions or, daily highs from like another day, like even like yesterday. I don't pay attention to any of that. All that I really care about is, can we manipulate either today's London session or today's Asia session? I don't care about the data from yesterday or anything like that. That data is not relevant to us. It's not helpful in the slightest, right? What is more important is today's price action. What is developed after the manipulation of today's sessions? That is where you will get an edge. That's where your edge comes from in the market, right? So looking at like data from like, even yesterday or a week ago is is quite crazy. I see people doing this all of the time. Like I see people, they're using like a daily high from like 5 days ago, or like a session high from like 3 days ago. And, as a result, it's very hard to get an accurate entry or an accurate feel on the market. And so that makes things very simple for you, right? Because you only have to pay attention to today's London session, today's Asia session. It's way easier to navigate. It makes your life so much easier, way less sort of complex, right? Now it's just a waiting game, guys. We're chilling, waiting for this to play out. Yeah, that's true. Dan, about like summer and kind of what when people say like, oh, don't trade in summer and all of this, often that assumption and a lot of that stigma is based on and that problem sort of arises from monthly seasonality. Okay. And what I mean by that is the returns of the stock market tend to be lower in summer. And so because the returns tend to be lower, people think that that's bad for trading. But, we trade a trend following system, right? So whether that means that the market's trending to the downside, trending to the upside, whatever the case is, we are going to be there. We are going to be there to take advantage of it. And that is exactly what we're going to be doing. So often when people say, oh, I'm not going to trade in December or summer, it's due to monthly seasonality and to do with historic stock market returns. But that doesn't really matter to us, right? Because we trade both ways, right? And so, yeah, my advice is to just trade what you see. Trade what you see, and as a result, your life becomes a lot more simple. Your trading becomes a lot more simple. And you become a lot more calm in the markets. Again, who's getting emotional here? Right, a lot of traders may have just got emotional. They may have closed this early. They may have micromanaged this trade. They may have gone break even too early. And as a result, they may miss out on this trade. Or if you were sensible and you did miss your entry, you would have used this as an opportunity to scale, not scale into this trade, but at least get an entry and position yourself into this trade. Again, does this mean that this trade has to play out? Not at all. Not at all, right? So just to summarize what we have here, right? 50, 100, 200 EMA. This indicates to us as a trader, indicates to you as a trader, that we are sell bias on this market. During the New York kill zone, manipulation very clean above the Asia high. Clear confirmation, entry on the break of the low of this bearish confirm, this black candle. Invalidation above the manipulation. Target a mechanical 1 to 2. And that's another thing, right? You see so many traders going for home runs in the market, going for these 1 to 10s, 1 to 20, like absolutely crazy risk to reward. But what if I told you like all you need to do is just target a 1 to 2? Target a repeatable mechanical 1 to 2 risk to reward. And as a result, again, your trading becomes very, very simple. You're not trying to go for these crazy home runs. And you're taking these small, repeatable, bite-sized pieces out of the market over and over again. And this also ensures that your backtesting data is reliable, right? How many times have you seen people enter a trade and, price might get down here like a 1 to 1.5, 1 to 2, and then they're like, oh, I'm just going to go for this low. I'm just going to target this 1 to 3 down here. And then price gets down here, tags your 1 to 2, and then reverses. And this is like a higher low or something. So targeting a mechanical 1 to 2 takes all of this kind of guesswork out of it. It prevents you from going for home runs, and it gives you a lot of clarity in the market. It helps to keep you very level-headed, very calm. You know the plan, right? This is a very good question, Lokesh. So you're right, we get around 3 A+ setups a week. You're curious, focusing on only A+ trades, does that improve your win rate and help reduce variance over time? That's a really good question, right? So basically the initial kind of problem that people face is let's say that the sell bias, you have like the London high, and you see a manipulation, right? Most people and a lot of people will just take every form of manipulation. They're going to take every manipulation. They're not going to have like any filter, right? And no matter what, they're just going to take the trade. So they don't filter for like A+ trades or C+ trades or whatever, okay? This is all well and good when the market is going up only, or when the volatility is extremely high and like everything that you seem to touch turns to gold. Okay? The problem with this, when you're taking like every liquidity sweep and every potential opportunity, the problem here is you take so many trades, but the main problem is when the market volatility changes and when the market regimes change. As a result, these trades that are now playing out maybe at the moment or maybe last week or a few months ago, they no longer will be playing out. And you will be getting chopped up in the market. So what I found with like filtering for A+ trades is basically what you mentioned, which is you will decrease variance over time, which is a mathematical term, meaning that, your drawdowns essentially will be lower, is how I look at variance. So by filtering for A+ trades, you will lower your variance, i.e. lower your drawdown, meaning that your returns will be greater over the long term. Yes, you can get lucky and you come along and the market regimes are amazing and everything, no matter what you touch, just seems to go higher or seems to go lower. And that's due to volatility and due to clean price action. But my question is, what happens when the market regimes change? What happens when the volatility dies down? You're then going to be taking so many trades that are not A+ trades, that have a lower probability of success. And so as a result, your drawdowns will be more significant. Okay. I would never take an entry before a kill zone. What I mentioned in the last video was we may see a manipulation before the kill zone, but all entries and executions will always be within the kill zone. So if you're looking for like a liquidity sweep, right, like over here, this liquidity sweep can occur before the session. But the entry, the execution, the confirmation, this has to occur in the kill zone. For sure. Can you trade EU-GU? Yes, you can. Yes, you can. So another huge problem that a lot of traders face, right, is they may understand like a mechanical system, or, you know, manipulations and directional biases and these sort of things. But the problem is that just on too small of a time frame, you know, like the amount of people that I've spoke to where they're operating on like the 1 minute time frame, the 3 minute time frame, and then things start getting a bit messy. And you start getting very emotional on these lower time frames. Okay. So the beauty of using the 15 minute for confirmations is, you know, when you drop down to the 1 minute, and I'm going to do this in just a moment, like when you drop down to the 1 minute, you're going to see these market structure shifts. I guarantee it, right? Let me just do it for like an exercise, right? So if we do drop down to the 1 minute time frame and actually have a look at the trade, right? There we go. What do we have, guys, right? We have a high, higher low, higher high, right here. Market structure shift, break of structure right here. The body close was right here. And then we roll over. We start rolling over, right? So the point that I'm trying to make here is, we know just looking at the 15-minute time frame that there's going to be market structure shifts on the smaller time frame. But the beauty is you don't have to look at that, because you already know that it's going to be occurring. And that is the beauty of trading the 15-minute time frame, because you now have so much more time. You can make much clearer trading decisions. And you can be very mechanical about your decisions in the market, right? Because as soon as you drop down to like the 1 minute, 3 minute, 5 minute, whatever it is, the smaller time frame, and you know, you look for these smaller time frame shifts, how do you make that mechanical? Because I can show you right now at least 15 ways in order to identify market structure in the market. And then all of a sudden you've took a pretty good idea of, you know, trading a mechanical system, a directional bias, manipulation, you know, session-based manipulations. And all of a sudden you're starting to make it subjective for no reason. And so that is the beauty of trading on the 15-minute time frame. You save yourself the headache, you save yourself so much time. You remove all of your emotion, and you're now so much more calm in the market. I remember the days when I used to trade the 1 minute time frame, and I used to try and match all this up. You know, the market structure shifts on the 1 minute, the order blocks, the inverse fair value gaps, everything. It's all overcomplicated nonsense. It's designed to confuse people. I'm not saying it doesn't work. I'm just saying your goal is to be here long term. And anything where that is subjective, like, you know, dropping down to like the 1 minute, market structure can be very subjective. And so it's hard to be here long term with that much subjectivity. You want me to break down my last 10 trades? That would take way too long. If you check out my YouTube, there's so much on there. So much on there. If you want to see trade breakdowns, take a look. That's right, Saeed. That's right. So now we're just chilling. Now we're just chilling, guys. Like, how many traders would have closed this early here? You know, they would have got scared. They would have micromanaged, right? And that's why the set and forget framework is so important, because now you don't micromanage. Now you just allow the trades to play out. You accept that this could be a loss. This could be a win. And you accept that you don't know what it's going to be, right? At the moment, it looks pretty good, right? We're starting to like break this low here. And so if we can like close and hold below here, we should drop lower, right? We have clean traffic to the left here. Okay? So, but we still don't know, right? And that is the kind of paradox of trading, in the fact that it's unknown. The outcomes are unknown, right? But yeah, come on, give me a liquidation candle and just run these lows right here. Right. Essentially what's happening here is, you know, yes, we're positioned short. We have an amazing entry on the break of this low. Like, this is an incredible entry and a very nice sort of a nice sized stop loss. Okay. Buyers have tried to step in here, and this may be the last sort of liquidity grab or the last sort of chance that they have, and then we roll over. Okay. So now that we're starting to sort of break below here, this is a good sign. If we can hold below, we should be pretty golden, right? So you have to understand, a lot of traders would have got trapped long here. Again, thinking, you know, this is a breakout higher, thinking that, you know, the market's going to go long, and they are essentially just liquidity in the market. They're providing that fuel, that liquidity, in order to push price lower, right? One thing that I will say, guys, is make sure that you set your take profit and that you stick to it, okay? Because this could move very aggressively, and then you could kind of get like a wick rejection, and then we start pushing higher. Okay, so always set your take profit as like a numerical value to prevent this from happening. Because certainly around the New York session, we can get a lot of volume, a lot of volatility. Price moves very fast, right? But yeah, always set your take profits. It's up to you, Lokesh. It's up to you. I wouldn't say that I prefer any sort of account type in particular. One thing that I would say is we occasionally hold a trade overnight. Occasionally. So that's something to consider. Very rarely do we hold over the weekend. Occasionally, not very often, but occasionally, we would hold over the weekend, but it's not something that happens very often at all. What I use is just kind of like the good old faithful, which is FTMO two-step. Does that mean it's the best? Not at all, but it's just what I've always used and what I'm sort of comfortable with, right? What I do, so what I recommend in terms of risk, right? That's a really good question, Peter. So, how most traders view, I would say the problem that traders have is they don't use uniform risk. They don't risk the same amount every single trade. And so what I recommend to do is, let's say you're trading for simplicity, a 200K funded account or challenge or whatever. Then I would recommend to use uniform risk. So uniform equals 2K. Okay, so every trade that you place will risk 2K. No matter what the balance is, no matter where you are in drawdown, no matter whether you're in profit, like whatever it is, that's the risk every trade. Or at least try get as close to that as possible. So like when you're putting it into a position size calculator, just make sure 2K every time. That's the unit of risk. Okay. Often a problem that I see is traders will, when they go into a drawdown, they sort of go into a shell and they start reducing risk, and maybe they go in a 5% drawdown and then they half their risk, like hoping to climb out of it. But for me, it's the plan is uniform, the risk is uniform, and so that is what I will use like every single trade, and that is what I will stick with. Ultimately, like everybody has different risk appetites and different plans and all of, this, right? But that is what I do. That's what's worked quite well for me, right? Does it mean that that's the best way to do things? Not at all. It's just what's worked for me, right? But whatever your risk is, stick to that every trade. Whether you pass the challenge or fail the challenge, that's the only two outcomes, but you're not going to sit in the challenge for years and years and years. I.e. halving risk and then halving it again. And then you've been in the challenge for like 9 months and it's like, what is the point in that? And often the outcome is, if only I just stuck to uniform risk, I would have climbed out of the drawdown and been in profit, or maybe even passed the challenge. Great question, Peter. Happy days. But it also depends on your prop firm and the rules and all of that as well, right? Ultimately, because, some prop firms have like trailing drawdowns and there's other rules and things like that. Again, which is why it's quite a personal thing, right? So US 500 went without us, guys. And that's how it is. That's how it is sometimes, right? So again, a huge problem that so many traders face is they would try chase price. So they would see this and they would get emotional. They would try to enter, they would chase the market lower. But what you need to do is just set your alert. And that's what I did, right? The alert's at the London high, set your alert, wait patiently. And as a result, you have so much more chart time and you don't get emotional. You don't chase price. You prevent yourself from chasing price. That is also one of the biggest benefits of setting alerts. Because I wasn't even looking at this market. And so again, it comes back to like, when you enter a trade, you close the charts down, right? And so just like when you close the charts down, if you set alerts, you're not looking at the market all of the time. And so if you're not looking at it, well, you're less likely to make a mistake. You're less likely to chase price. You're less likely to get involved in a poor position in the market, right? But it's easy to look at this and be like, oh, rejection candle. Oh, we sold off. And then all of a sudden you're down the rabbit hole. All of a sudden you're in the rabbit hole, right? and you're looking at other systems. Because if you looked at, a sample size of n equals 1 and you're down a rabbit hole and you're like, oh, I'm going to look at this now. So kind of right here, the eyes on the kind of interesting thing is, can we close below here? Right? And then the next thing is, okay, we've closed below. Can we hold below here? Can we hold below here? If so, you should see this pretty quickly. Right? Because when we look to the left over here, we have nothing. We have very clean traffic. Okay. Is that something that I, look at in terms of like making a trading decision? Not at all. In terms of, visually analyzing the markets based on price action and my 8 years of experience, this is just a visual thing that you can look at to be like, oh, okay, if we can't close and hold below here, it should be curtains, right? And we should just drop lower here on gold. Okay, because if we do reclaim this sort of minor swing low, this could be used as a base for buyers to then maybe drive price higher. Okay, so that's why we, at this stage, we want it to, close and hold below. That's sort of a bearish signature in price, and then we should just drop lower at that stage. Right. So we've had a pretty strong rejection from this level. We've had a correction here. And so this is a sign that sellers have sort of loaded up here. It's not like price has just gone without everyone. This is an opportunity for, we've got a pullback for sellers to scale in. We've already had a correction. And so this should continue, right? Because as we know, the market, the way that it works, right, which is we get an impulse. So we get an impulsive move. And then once we've seen an impulse, we have a correction. And if we have the direction correct, after this correction, we should see another impulse to the downside, which is sort of the leg that we are in right now. We're in that impulsive leg, which is like this right here. So at the moment, everything looks absolutely fine. Stop loss at break even? Not for me. That's TP, guys. What a trade. What a beautiful trade, guys. Absolutely picture perfect. Validate plus trade. I want you to congratulate yourself, right? Let's get some W's in the chat, guys. Let's get some W's in the chat right here. What an absolutely beautiful trade right here. And that's how we do it, guys. And that is how we do it. What an absolutely beautiful trade. So I want you to pat yourself on the back. If you did not micromanage, if you did not interfere, and you did not take any profit off the table and you held this, congratulations. You are in the top 0.01% of traders. What an absolutely incredible trade. Feels good, right? For me, this was a 6K trade. This was a 6K trade. So this, I don't know if you can see. I don't think you can. I don't know why. Yeah, that's not working. I'll send the profit chart after this, but this was a 6K trade. Beautiful. Yeah, I'll send the profit chart after this stream. Sensational, guys. Who followed the plan? Who followed the plan? That's right. That's right, Divan. Yeah. Yeah, I thought I'd jump on here for sort of like a, stopping you guys from self-destruction. That's right. That's right. You know, trading can be lonely. Trading can be, very, very lonely at times. And so my goal with this is to get on here and to prevent people from over trading or doing things that they shouldn't be doing, right? And as a result, you should then be very calm and you should then not be making any mistakes. That's the goal here. If you missed it, don't worry. There's always another trade around the corner. There will be another trade. You will live to fight another day. Yes, I do. So down every single day, I trade London session, New York session with all of the exclusive members. And so that is my exact game plan, trade plans, executions, everything is shared. Absolutely. If you want to check it out, I'll pop over the link. You can take a look. And that's how we do it, right? So, as I said before, I was open and honest about last week's performance, right? 2 losing trades. Down minus 2R. And that's, a huge problem where people start spiraling, right? You may lose 2 trades. It's nothing, right? What you then need to do is get back on the horse and you need to just execute the plan without hesitation. You know the plan, you have conviction in the plan and the system. You got to get up the following week, the following day, repeat the system over and over again, right? And as a result, you then pick up the returns. You continue winning, right? Whereas if you hesitate and you don't, follow the plan, or maybe you're scared and you reduce your risk or whatever, well, maybe you took half a win here, right? Where you should have been full risk, right? And so that is why it's so important to just get back on the horse. Yeah, you missed it, but you took it on the retest. Happy days. And that's kind of what I encourage, right? This is often a problem that traders face is, we're all human. We are going to miss trades. We're going to be late to the market sometimes. So, let's say price is all the way down here and you're like, oh, I've missed the trade. Well, as long as it hasn't hit your take profit, you can just go ahead and set a sell limit here, wait for price to come back, tag you in, and then you go with the trend. So that is exactly what I encourage, right? If you're late to the party, if you missed the trade, and you're certainly late, well, just set a sell stop or a sell limit. And then you don't have to chase price. Chasing price is not what you want to be doing. You want to be being patient, wait for price to come back, you're tagged, and as a result, you get a winning trade. Right? And this is only as long as price hasn't hit your take profit. Right? Sensational. Apart from gold and US 500, what other pairs? Nothing. These are my two babies. I thought that I needed like all of these different pairs, and if you trade 3-5 pairs, it's more beneficial. And what I realized is keep it simple. 1-2 pairs is more than enough. 3 A+ trades a week. Keep it simple. And as a result, you're not overwhelmed, right? If you're just trading 1 or 2 pairs, it's very manageable. Most people can do that with a full-time job, or, even if you're just trading full-time, right? 3 trades a week is more than enough action. And you will find that's also the case when you start to scale your funding capital as well. Less is more. Less is more, right? But yeah, what I realized from sticking like 1 to 2 pairs, again, you just become so calm. You become so calm. You know the plan, you know the pairs, you know the tendencies of the pairs, and you have the backtesting data, and stick to it. Yeah, often what a lot of traders do is they will have like a quiet week. So, let's say there's like 1 trade. There might be like 1 trade in a week, or maybe 0 trades. And then as a result, traders get emotional, they get sort of itchy feet, and then they hop to another pair and they're like, oh, GJ looks good, EJ looks good, right? And they often haven't tested it and they don't know if it works. And so just stick to 1 or 2, and it prevents you from being overwhelmed, for sure. What a beautiful trade though, guys. This is incredible. This is incredible, right? So what I want you to do right now is I want you to internalize what's just happened. i.e., you followed the plan, you followed the rules, you took an A+ trade, it played out, and because of that, you were rewarded. So I want you to internalize this feeling, and I want you to internalize what the result was from following the plan. That is very, very important. Also, a lot of traders get ahead of themselves. So, for example, they have a winning trade like this, and, let's say your account is up like 5 to 10%. What a lot of traders are going to do is they're going to then, scale that up. So they're going to keep going and going and going. What I recommend doing is just get it paid out. Get it paid out, take it out of your, the prop firm into your bank. Take it out of the bank, literally smell the money, put it on your desk, right? And look at it. Look at the money, internalize it on sort of how you made that money. Then it becomes real. So if you are in profit, I would say anything more than like a 2% gain on a funded account, if that's like a 200K account, that's like 4K, get it paid out. Let it hit your bank. Then, if you want to pay yourself, reinvest it into another challenge, whatever you want to do, go ahead. Go ahead, right? But get it paid out first. Okay, cool. I'm going to wrap this up, guys. Thank you so much for your time and your support and your energy and your questions. Thank you so much. Stay disciplined, and I'll catch you guys later. Take care. Bye-bye. Also, if anybody wants to take your trading to the next level, check out the exclusive community, or if you're interested in the one-on-one mentorship, drop me a DM. Thank you for your time, guys. Look after yourself. See you tomorrow. Take care.